you can't create wealth overnight, so you have to give time. So for customer's own sake, we have to retain him or her. When you start tracking the conversion rate or the fill rate as we call that, completion rate, we were shocked that it's 82%.
Wow. So the whole lens on education that you're putting extra effort on makes my journey slightly more smooth as far as my evolution as an investor is concerned.
Right from, I think, April 2022 till February 2023. You would be surprised that while markets was either falling or not going anywhere, the month-on-month new demat accounts, barring the IPO months, were actually falling. The mutual fund SIP book was not growing. People were actually redeeming more money than investing.
Sure.
Whereas Genius was actually advising people that this is a good time to increase allocations towards mid and small cap.
Can you imagine an 82% fill rate for a questionnaire which is 19 questions long? And in the world of mobile apps and low patience, that's what ED Money has been able to achieve while trying to tell you what your financial personality looks like. What they've been also able to do with all of this data that they've gathered about you is a deep degree of personalization in your experience with the application as well as the communication that you receive. As a brand, they've been able to do very well is establish a reputation of working very well for the long-term investor. Not really for the gimmicks, not really for the short-term traders, but the long-term investors. Great clear education and an amazing maturity in terms of how they've done some of these things. Here's Santosh Navlani, the Chief Operating Officer of ET Money, on how this is playing out. Thank you so much for doing this, Santosh. Great to have you on
Pleasure
board.
to be here. Thanks, Ankur.
Super. So Santosh, very simple starting point, your personal journey of having gotten to this point and how your early thoughts around FinTech and what was broken and what led to money sites and how your journey has been since then.
So I guess our journey was more accidental into FinTech and not really a planned one. I remember we had Mukesh and myself had left our jobs and at NMOB and were trying to delve on some ideas to do something on our own. We were young, we were kind of possibly more attracted to build for ourselves. And one fine day, what happened while we were planning our journey to entrepreneurship in a way that we will want to survive for longer, we hit upon planning emergency funds and planning our protection like health cover. And that's where the whole journey about figuring out which products we should be buying for ourselves before we jump into the entrepreneurship bandwagon.
Sure.
And then we realized that actually figuring out which products you need to buy is so complex.
Sure.
There are so many insurance policies, so many mutual funds, so many credit cards, so many bank accounts that it's tough for a human being to really understand all these things because there are hidden terms and conditions, the products are opaque, the buying journey is not seamless as well. And while having no idea what we will do in entrepreneurship, we ended up on building a product on money sites, which actually solve some problems on investing. And that's about we've kind of gone strength to strength multiple times. I think one core principle that we still combine or we still operate upon is whatever we build, we should be helping consumers solve their problems. And in a way that the person should be getting better financially, whether it's come to investing or savings or protection or any other financial need. If the consumer's life is not getting better by buying the product, we would not sell that product. Okay. So I think those two things have remained forever with us. And I think we're on a good journey on that side.
Very interesting. So, the last few years have been a lot of attention to the subject of wealth tech. There's been a ton of new action, ton of new avenues, probably a ton of new wealth created as well. So help us understand this whole lay of the land on, what the landscape looks like now. You were quoting some numbers and stats around how much FD has been done in India and how much mutual funds sell in India and what the retail lens there is. So just help us set the context.
I think there are multitude of products today. And when, in 2008, 2009, or maybe earlier when we started money sites, and even till 2014, 16, when we morphed into ET Money, the availability of products was actually not there.
Sure.
Most people actually were relegated to like traditional fixed income instruments like fixed deposits, NSE, PPF, what do you want to call it, stocks and mutual funds. It is only in last 4 or 5 years that we've seen so much innovation in terms of actually generating returns out of multiple possibilities. So
Okay.
today you have some kind of innovation happening on fixed income. You have kind of the old days where actually buying FDs from your own bank. Today people actually can buy FDs or invest in fixed income instruments or banks or NBFCs from a third party platform making money.
Sure.
Of course, mutual funds have become extremely big. There has been crypto, of course. There has been brokerage in a very big way. Brokerage was not as big as it is today. And generally, trading, short-term trading has become bigger. Now, whether that is good for customer, bad for customer, that is something, a topic for different discussion.
Spike in demand accounts.
Yeah. So I think the possibilities that people can create wealth upon or generate some kind of short-term return upon have increased manifold. And
Sure.
hence, I guess the role of wealth tech players like us becomes all the more important, where you can actually kind of create some signals out of the noise that people are all subjected to, and actually buy only the products which are important to them, or for the other, don't really create create noise in the portfolio, but create some value in the portfolio. So I think most people have products and not wealth. I think our role should be about how do we create wealth from products.
You mentioned this in our offline chat as well, this whole lens on how many people ended up making money via doing some of these activities. And as a platform, which is supposed to be the go-to place to enable some of these transactions, what is the role that you have to play? Let's double click a little bit on what is the role that ET Money is currently playing, aspiring to play, vis-a-vis what else is happening in the ecosystem.
I think our biggest contribution to customers' journey is education. So long ago, we realized that it is, fortunately or unfortunately, the investor's interest in the marketplace comes in only on two occasions. One, there is a live calling that he or she needs to invest. And second is the market environment, where suddenly there has been a rally in the marketplace, and the returns of last 1 year, last 6 months, maybe last 2 years looking pretty good. Or maybe your neighbor or your colleague or your extended relative has actually become rich by investing. And that's basically opens up a thought in people's mind that I also need to invest. So these two things actually happen in a way that nobody can predict when they happen. But what happens once these trigger happens in your life is people start researching. Now, research used to happen on Google, today happens on YouTube. So people search for content which can help them make a decision. So I think education plays a very important role. And we spend a lot of our energies on educating people and how to go about investing, how to pick up mutual funds, how to build a good portfolio, what is actually the requirement of a good financial plan, how do you plan retirement, how do you plan long-term investing goals. So we focus on those things a lot, which typically happens off platform. So people will actually discover ET Money either through Google search or a YouTube kind of video that we may have made for them, maybe on social media channels like say Instagram or Twitter or wherever. And once people stumble upon the content, if and when they feel the need to really invest, they might download ET Money app. And over there, the entire focus is on how do we really make the journey seamless for the end consumer in a way that he or she feels he or she feels is buying a mutual fund can be as easy as buying any kind of goods on an e-commerce platform. So we focus on that side, and I think when it comes to investing, it's essentially three things you have to do as a platform. There is a pre-purchase journey that everybody goes through, which is basically opens investment account, doing the KYC, making a first purchase. And then there is post-purchase, which basically means that how do I really manage my investments? How do I really identify risk in my portfolio? Do I need to book profits? How do I avoid losses? And of course, then there is a journey for how do we really basically go about managing on a daily basis. Investing is long term, right? So it is not that I invest today, in a week's time, everything goes hunky-dory and I make some money. People need to be at it for a few years, if not a decade. So that's where the chunk of the work actually happens. So education and that second aspect where we make people focus on their investments and for long term, where most energies get spent. Pre-purchase, which is opening an account, doing KYC, make first purchase happen, redemption of transactions, withdrawing of money. Those are easy tasks. The bigger value creation happens on these two occasions where we educate and we help people manage money.
So if I were to think of it as a consumer, ultimately I need to manage my money, and I might have a portfolio of different asset classes involved. So do you see this eventually in some sense converging, that people who were doing this will now try to do this because they have to expand the share of wallet, so to speak? And where does that then eventually become very uniform, that everybody is offering everything?
I think nobody's offering everything today. Everybody's focused on certain aspects.
Sure.
So, maybe from ED Money's context, I can talk more, or the space we operate upon. So, we operate in the space of primarily capital markets. So,
Sure.
If you were to really say that, how is ED Money different for an end consumer? We are a long-term investing app.
Okay.
Yeah. So, whatever ED Money does is only focused towards creating long-term wealth for you. And long-term wealth typically gets created by investing capital markets.
Sure.
Yeah. So equities form a bunch or rather a large portion of our business, consumers' portfolio, and generally the overall traction in the space has been on the brokerage or capital market side. Now, brokerage will be demat. Capital markets can be mutual funds as well that we do. The second aspect is fixed income. There are opportunities where people are actually making access to fixed deposits of other banks available on apps. We do some of it as well on ED Money app. And third is like the gold aspect of it. So traditionally there has been like equity, debt, gold.
Correct.
And then gold has multiple forms of investing. People can buy physical gold, people can buy digital gold, people can invest in sovereign gold bonds, people can invest in gold mutual funds, which is again, we offer gold mutual funds way of investing in gold. So I think equity, debt and gold are primary asset classes for retail investors.
Real estate
And
also
that's
getting
where-
into fund mode now in some
So real
sense.
estate becomes, of course, one of the primary asset that most of us hold, indirectly or directly, be it land or where we stay in that sense. But like the retail democratization of real estate has not happened in the country yet. We
You see
don't
that
have enough
coming
real
into
estate
it?
funds. We do have real estate investment trust today, but again, the market is very shallow
Sure,
today.
still early.
It is still early days. Of course, a lot of innovation can happen as we formalize a lot of land holdings, a lot of monetization opportunities come into picture, a lot of players are involved in that bit yet. But again, what happens is people always compare how much return I can make via these sophisticated real estate instruments like REITs, or for them investing in an apartment or a piece of land. Now, the comparison typically holds in a way that there is an REIT which can give you a regular income over a long period of time, which may be 8% or 12% per annum. But people typically want a higher return from their real estate investments. So we have not seen a traction on these products, at least digitally yet. But I'm sure it will open up a period of time as we move along. And then there are some kind of fixed income instruments opportunities on credit risk, wherein basically people are building portfolios of products on top of agricultural investments or new energy investments, or for that matter, some piece of invoice discounting. Now we can go on and on, but there is enough opportunities available to basically invest in fixed income in an online way today. But again, the larger chunk of portfolio of people and more regulated investment products are actually stocks, mutual funds, and maybe ETFs, which is where the action is today, in my opinion.
Fair. So the lens I was trying to apply is from a customer relationship depth and the lifetime value. What you will want to do as a money management place is for him to have a increasing share of his savings or investments being managed through your platform. That's the normal way of, let's say, making sure you have the highest mind share from the customer in some sense. And if it means that you need to increase the number of product offerings within your own play, you might want to do in that direction. Or you might talk about depth within a certain set of asset classes, that, okay, you are going to buy X amount of mutual funds in your life. I want to make sure all of that is here. So just help us understand this lens on customer relationship, what it looks like, what it looks like for ET Money today, and where is it headed from there?
A wallet share of mutual fund is something which we would want to own up as a company. We work towards it. So whether it's about investing towards long-term, investing for tax savings every year, investing for short-term goals that people may have, or parking surplus cash that may have. So we have products across these all four dimensions on the app, and you can invest in mutual funds on those things. But what we do is we also make other curated products available on the app. So not all the time the investor wants to take a market risk with respect to short-term investment. So a debt fund, while most debt funds carry very low risk and they can give you a predictable return that you may be aiming from short-term income. But then because you can't guarantee that you will make a 6% or 8% or a 7% from your debt and mutual fund investment, some investors do like to have an option of fixed income in other forms. So we do fixed deposits, we do P2P lending products on customers where we curate kind of providers, suppliers of these fixed income instruments in a way that we believe they are far more less risky or kind of established sources of collecting money for the NBFCs or other kind of instruments, and provide a good stable return to the customer. So we curate those products as well. There is a big need of retirement in the country. Most people, at least today's millennial population, all of us are not saving enough, but are spending a lot more. And given the developing state of the country that we are in, we are not going to see a low inflation regime very soon. So given that inflation is going to stay for long, our needs and wants and desires only growing, our lifestyles are getting better to really support
and
a
higher
great
maintenance.
and high maintenance, yeah, and to really fund that future life when you are on zero salary post retirement. I think retirement planning becomes very important. We have a product called NPS, National Pension Scheme. So that's, I believe, it's one of the fundamentally great product to own for every working individual expecting to retire at some point of time in life. And it happens to be world's lowest cost retirement product. So we provide access to NPS on the app. And more importantly, we actually go about providing advisory in all these products to our consumers so in the form of ED Money Genius, which actually becomes a way to take informed decisions, not just once, but multiple times depending on market conditions. So we provide that as well. So idea is that can we really own all kind of short-term, long-term, mid-term horizons of the consumer? And ultimately, everybody is targeting a return at a certain amount of risk.
Sure.
If we can provide these via regulated products like mutual funds and stocks and fixed income instruments, we prefer that. And more importantly, we actually try to own up the share of the customer's wallet, not just from investing, but overall personal finance, where insurance, if you are a long-term investor, becomes a critical part of your portfolio.
Sure.
Not from investment, but a finance portfolio in that sense.
Very interesting. So, I would love to jump a little bit to the whole persona of the guy who's coming into the platform. Is there the so-called ideal customer profile that you have in mind when you're doing all of your acquisition efforts? Because you mentioned the epiphany moment of, hey, he's making money, why am I not? Or the life calling that, dude, it's high time I started saving because at some point I'll want to retire. So both of these things are, in some sense, maybe related to a certain age level, a certain life stage, a certain life occasion. I got married, I had kids, some of those things, right? So from that lens, from the acquisition side of things, when you're expanding the number of people investing via ET Money or engaging with ET Money, what's that customer segment that you have identified as a core?
So we actually focus on a mindset of long-term investing and not really a specific demography, if I were to say that. And that mindset of long-term investing typically comes 2-3 years into the job. Now, many people are starting to work early in life. So this moment may come at 24, 25. For some people, the moment may come at 27, 28, or maybe early 30s, depending on your upbringing, lifestyle, place that you're belonging to. So I think we focus on that
attracting a psychographic segment than a demographic
segment.
Yeah,
so we focus on that need of investing towards long term. We also kind of probably are better suited for investors who are short on time. So we are not somebody who is serving your need for daily trading, a lot of short-term investments, maybe brokerage. We are not serving that need. We don't intend to serve that need in the near future, at least. So hence, we attract a set of segment which has started investing elsewhere, maybe short-term trading, but has realized that it is not his or her cup of tea. So that person gets attracted to ET Money because we educate on long-term investing, because we educate on building right portfolio.
And that's mutual because you want that kind of people who are gravitating towards long-term and are not necessarily the very, very high-intensity, low interval trading kind of plays, right? This whole acquisition play, and while all of these platforms talk about reducing friction and making it super simple to do that, that need can be served by other platforms as well. But the whole lens on education that you're putting extra effort on makes my journey slightly more smooth as far as my evolution as an investor is concerned. So in that sense, now people enter at various, let's say, demographic stages, but the mindset of long-term investing. But how does the consumer journey now look inside the platform? I understand that a majority of first things that people do, the first activation, so to speak, would typically be a mutual fund purchase. And then that'll be like a larger suite of products that you just spoke about in terms of fixed income products or insurance or some of the other categories you spoke about. Is there a path that you've been able to understand that this is typically how a journey would play out? And is there a, let's say, set of different kinds of paths that people are taking inside the platform?
So I think opening up the entire app to the a user who's coming on the first time with products which typically we don't buy on daily basis becomes a very hard call to take for an
Sure.
app like
It's also
ours.
overwhelming, right?
Overwhelming as well. It's intimidating, actually, I would say.
Absolutely. And
Yeah,
that's a
it's
put off to me.
it's a put off. Yeah, so we don't really do that.
Hmm.
We focus on the kind of getting the highest selling product or the product which has most traction in the marketplace, which is mutual funds for
Sure.
retail investments.
Hmm.
So we prefer that everybody kind of gets
Enters
exposed
via
to
this.
that or enters via this route. The app is designed for that. In fact, when you download money as a new user and you spend time on the app, you would be nudged towards opening an investment account where the first product you get exposed to is mutual funds
Mutual
only.
fund. That's your default
Yeah,
entry point.
Yeah.
Hmm.
So that becomes the entry point. And some users, even if they open an account with intent to invest, do get kind of, I would say, not confused, but quite circumspect about what is the right product for me.
Sure.
So we have a product called Money Genius, which is an advisory service where we help the investors take a right call, be their first investment, be the repeat
Will
investment.
this be like an interactive play where I provide a lot of information about my life stage, my needs, my goals, and then you will come back with insights?
We try to understand you first. So we have something called investor personality. So once you kind of do that, it basically tries to assess you on slightly behavioral aspects. We call it 3B model. So
Sure.
behavior, biases, and the aspect of how you take decisions when it comes to finance. So these three things we try to assess you on those things, and we give you a personality trait attached to you. So somebody may be a strategist when it comes to planning money. Somebody may be an adventurer when it comes to planning money. Planning for money. Somebody may be like a protector. Somebody may
Sure.
be wired to be an adventurer. Right. So we have 8 personality traits. We have a risk score attached to it, and that basically makes very engaging way for kind of investors to really know about themselves.
Very fascinating. So, in terms of the user's willingness to invest that kind of time and effort to one, give you all that information and then discover this personality with themselves, do you see generally enough traction there, or is there like, okay, there's 5 more forms to fill?
I'm glad you asked that question. So we are surprised. In fact, we delayed this product launch, like this aspect of the onboarding journey by possibly quarters, because there's a debate going on that who will fill up this long form.
Yeah.
So just to be precise, there are 19 questions in that. And all the 19 questions are very pictorial in nature. None of it's like it requires you to really think a lot. But still, we felt that given the attention span on mobile phones, people may not really be ready to give that time and attention to it. When you started tracking the conversion rate or the fill rate, as we call that, completion rate, we were shocked that it's 82%.
Wow. So typically for any serious business as well, where you're supposed to submit your KYC, we've seen insane drop-off rates because every step that you add in the funnel causes a certain kind of drop-off. Yeah. And in my impression, what I'm trying to understand better is thanks to the way the brand is being positioned, you are attracting a kind of audience which is more serious, more committed, which then translates into a slightly more appropriate behavior for that lens.
Because most people don't discover money through some kind of display or a search campaign. They discover money because they were researching about funds or right ways to invest, be it on Google, be it on YouTube. Maybe they would have watched 3-4 videos, maybe 3-4 blogs. They download the app and they're very high intent. So unlike others, we don't see different. So we don't see too much drop off. Of course, there is a drop off. Of course, it's possibly unreal or kind of unrealistic expectations to have that an investor will download the app and 100 out of 100 will actually finish the KYC. It's not the right expectation. In
some sense, it's also a function of how aggressively you are expanding, because if you're getting installs from left, right, and center, all sorts of marketing campaigns, that will automatically translate into downstream poor behavior. But if you're being a little, let's say, sensible about that acquisition side as well, then you attract a certain kind of people. In some sense, it might limit the aggression on the growth pace, velocity perhaps, but at the same time, it will give you the kind of audience you're seeking.
So we've done enough experiments to really come to a stage where we realize that going aggressive when it comes to investing doesn't really help, because people will invest when they have money. And because we typically want to attract people for whom we can create meaningful wealth, so we don't really possibly attract people who have 100 rupees per month to invest. In fact, I don't believe you can get anywhere in life to start by 100 rupees. It can be an experiment for you, but that cannot be a constant behavior.
Fun fact, right? I don't know what kind of business model would push people to run TV ads to get people to start investing in a crypto product for like 10 rupees a day or something to that effect, right? I mean, in some sense, is that a mixed up KPI somewhere that somebody is chasing a end goal which is not really very useful?
I'm possibly not the right person to answer that question, but I think it's also about there is possibly a business model geared towards transaction income. So if the platform is making some kind of transaction income from every transaction you are bringing to the app, then they may not care.
They like to have as many transactions as you can.
Yes, but unlike that, ED Money is not an app which basically creates transaction income from every transaction. In fact, we don't earn anything from mutual funds.
This is where a bit of shift happened in the industry. Somewhere you spoke about the fact that there was this whole commission-based reselling model, which biases an advisor in some sense to kind of push some products over the others, which was probably the case in a lot of offline investment advisory ecosystem, where the advisors will push something which makes money for them. And that era has changed because of these digital first plays, which have made it a more direct kind of play. Yeah. Do you want to double click on that a little bit as to what that change means and how that changes business model for somebody like you?
I think so. India is a unique market where by regulation there is channel conflict. Yeah. So regulation governs an AMC to really have two plans. One is direct, one is regular. Okay. So when you buy through an agent, it is typically called mutual fund distributor. It's called MFD in industry parlance. So when you buy something from MFD, you would be buying a regular plan where he or she will be making some commission. There are apps which are regular today, even in today's times. There are basically banks which may be selling regular plans to you, or maybe the neighborhood agent may be selling a regular plan to you. So not everybody is biased, in my opinion. Some people would focus on customer outcomes, and because mutual fund distribution is such that over a long period of time you make money only when a consumer makes money. And money comes over a long period of time, so you need to retain the customer. If you provide good investing outcomes, people tend to stick with you. So, but given that there's always an option to buy a direct plan without commissions and save on commissions, I think on digital as a medium, we are wired towards getting attracted towards bargains. Okay, right. So it's very tough for an individual to let go of an opportunity to buy a direct plan, which is as easy to buy as regular plan.
Sure.
No more difficult, and also ends up making more money for you. So I think the industry got changed towards, as more and more people got aware that there is something called a direct plan available. More people wanted to buy a direct plan, and more so it happened online more often than offline, because in offline there is a cost of search, cost of travel, physical friction.
The distribution is just deeper with the agent route. I mean, that's the first path most people discover mutual funds.
So I think I typically try to say that there are two markets in mutual funds in a country. There is offline regular market, and there is online direct market.
And that's the only two, because no one's able to buy offline direct and no one wants to buy online regular.
So people can buy online regular, but very few people buy.
It's a bit careless to kind of give commission where you cannot choose.
No, I think it's value addition, right? So if you believe as a consumer that your app or your platform you're buying from adds value in terms of giving you right advice or guidance to decide what you should be investing in, maybe there is a play for charging
Indians,
commission.
The way we are wired and the way we think about advice being, let's say, monetarily valuable, I would imagine people, if they knew that this exists, will gravitate towards this. So online direct would have a disproportionate share of growth, right?
On digital media, we are possibly bargain hunters all the time. And direct is a everyday sale, right? Everyday sale, right? There is no day where direct is expensive than regular or same price as regular. So people buy direct.
It's a bit of a high involvement play regardless, right? No one's going to go shopping. It's not food delivery. So you're not going to buy on impulse. You'll not buy super frequently. You'll buy once in a while. You do it more carefully. You will do a long-term decision making. You'll do a ton of homework around this. So which is the online bargain hunter, or at least being a well-researched guy, it can be a safe assumption to make somewhere.
So I think it is both, right? So investing is life calling, as I said.
Sure.
Investing for long-term is all the more life calling. Life calling doesn't happen without being well-read or more aware. It's hard to believe that you will attract a well-read, well-educated, well-aware consumer to your app, and he or she will not be aware about direct. or regular.
Absolutely.
Yeah.
So, which is what then makes me wonder about this whole nature of aggression in growth, because the segment of these people, let's say 100 people are coming in, well read, well educated, well qualified, would be a percentage of those, not necessarily all.
Yeah.
And by design, then you're gravitating towards people who are, let's say, falling in this small subsegment of the well read, well qualified,
Yeah.
well educated, intentioned people who
Yeah.
are willing to fill up the form that you're asking them to fill up.
So I think filling up forms used to be tough, but it has possibly become easier. So look at this today.
So saying it's just lesser friction which makes more
Yeah,
people
so I
fill up.
think there is. I think the biggest friction is OTPs in life, which become auto-populated on mobile phones. I think the only complicated piece is today is entering a PAN number. A lot of information that like a lot of people who come to the eDmoney app may already be investors somewhere else.
Sure.
About 2/3 of the users who come to the app are already KYC verified because they may have opened a Demat account elsewhere. They may be an offline investor with an agent or a bank. So what happens is we have the kind of fortune to basically autofill a lot of things for the end user. Yeah, the moment you enter PAN, if you're KYC verified, a lot of information comes from the KYC registry, which is available in the country today.
Yeah.
So I think filling up form is not difficult. Submission of proofs is not difficult because there is DigiLocker where your information is stored. You just enter OTP and DigiLocker comes in. I think payments is not difficult because it's real-time UPI payments for everybody. Earlier, it used to be that because you can't verify a bank account in a real time, you used to link a bank account to your investment accounts. It is no more the case. So I think all the frictions due to
enabling infra.
Yeah, so I think fintech infra in the country is a lot of stuff is powered because of the government initiatives.
Sure.
I think it's all about the UX today.
So the form that I was most interested in the fill rate was this 82% fill rate of this personality style quiz, right? And that's the 19 questions. I was like, okay, people are actually filling all that up.
Yeah.
It's partly my own curiosity to understand what maybe I don't know about myself.
It is. It's possible partly curiosity and partly high intent to invest. So curiosity may be there even if you don't want to invest. The moment you say that you would love to, would you like to know yourself as an investor, how you make decisions? And before you put your hard-earned money into work, you might want to just spend a few minutes of your time to answer those questions. And it helps a ton in a way that you would know that you are somebody who may not be ready to take excessive risk for your short-term investments.
Absolutely. Yeah. And which is what now makes me wonder that those 19 questions give you those 8 personality styles that you spoke about. In terms of the treatment of these 8 personality styles, in terms of what downstream communication happens with them, what kind of journeys they go through, what kind of recommendations come to them, tell us a little bit flavor of what changes and how does it change.
So we try to do as much personalization as possible in these things. So I'll probably give an example. Maybe it is more finance or investor behavior than marketing communications. But it's like, suppose there is a profile of investor which we qualify as strategizer. Yeah, he or she strategizes a lot before doing anything in life, and primarily investing at least. There are 3 behaviors there are 3 parameters on which we assess you. So there is something called as financial mastery. Are you really somebody who's aware about basic concepts of finance? And then there is something called as loss aversion, which is basically how sensitive to losses you are as a consumer. So if market falls, do you lose sleep tonight?
Sorry, so is this a part of those questions, or is this something you'll discover subsequently?
No, so we ask questions and we analyze that. Ultimately, the 19 questions come to these 3 parameters.
Okay, so you spoke about 8 personas, but you spoke about these 3 parameters, and the combination of these 3 parameters will give you those.
Will define the persona. Okay. Yes. Sorry, maybe
that's okay. I'm just trying to understand the sequence of steps.
So the questions will basically in the back end
score on these 3 things.
Score you on multiple things, and ultimately 3 parameters will decide what personality you are.
Sure.
So these 3 parameters for people who are kind of labeled as strategizers are somebody who is high on financial mastery.
It's a very simple parallel to an RFM kind of model, but I understand the logic is kind of different, right? It's a parallel. I won't say it's
a parallel. It's a parallel.
Yeah. But very interesting to have made this framework, and I'm assuming has it evolved meaningfully in terms of your the way you score, the way you parameterize, and the way you translate the 8 personas?
Yes, so the investment in how we really kind of advise your investments under the eDmoney Genius offering of ours is based on this. You cannot start
But this is
advisory
insanely
without
powerful
this.
in some sense, because if you have all that many people whose financial behavior is something you know of, like at day zero on entry, then that can be amazing in terms of how you craft their downstream
Of
journey,
course,
right?
it basically also tells you that how do you look at protection of the portfolio. There will be parallels in how you look at protection of your life goals. So how
No,
good
I'm
or
actually trying to understand whether this has a very serious bearing on retention as well, because you guys know me better than anybody else does. And now I'm much more inclined to work with you to guide me better compared to what I'm doing with anyone else, because no one else knows me this much to be able to guide me effectively.
Yeah, exactly. So I think as we were talking before the kind of chat as well, that we as a company focus on retention simply because of two things. One is you can't create wealth overnight, so you have to give time. So for customers' own sake, we have to retain him or her. Secondly, the business model is such that we don't really make money from mutual funds.
Yeah.
We monetize the efforts that we put in via you being aware to manage your money effectively well via investment advisory, which is our 80 Money Genius product.
But that's not a subscription product, it's a free product.
It's
It's subscription.
subscription.
So I actually pay for GAN in some sense.
Not pay for gun, pay for advice. So pay for
Advice.
actionable. So pay for action basically. So let's put this way: a Russia-Ukraine war broke in on February 24, 25 last year, and then post that the oil price went up. Everybody was talking about the crypto regulation which was coming in the country. A lot of money got lost by the people. And on top of it, there was volatility in the equity markets because central bankers across the globe were increasing interest rates. We don't know anybody in right mind would have been actually wanting to put all their monies in equities at that point of time.
Sure.
Yeah. And what happens today is if you're not investing in equities or mutual funds, SIPs that you're doing, you tend to keep all the money in the bank. Yeah. So if money is not finding its way into your mutual fund folios, it remains in the bank account earning 2.5% interest rate. So a lot of wealth gets destroyed just because inflation is 7% or 8%.
Sure.
Yeah. So the users, if they don't get right advice, that maybe equities are the right place to be in right now, but debt investments on gold is. If there is nobody to tell me that it's a good time to put money in gold, I would keep my money in bank account.
But in some sense, this is now getting a little intelligent because of the personality style that you already know about me, and the Genius platform, which I'm paying to give me this advice, is utilizing all these external signals to find what it means in my world and what should it mean from my decision-making lens.
So it's quite complex, but for a user, it is actually quite simpler task.
You're simplifying the whole translation of all of those things into implications as to what should it mean for me.
Yes, it's for an end investor, it should only mean that how should he or she invest this month? As simple as that.
So, very simple question: is this entirely a data-driven, automated kind of engine, or is there human power behind it?
It's all data-driven, automated. We call it quantitative way of investing. So it's a quantitative model which powers all the decisions that the advisory service delivers to the end customer.
And you see it doing better or equally good as a human advice somewhere, because the level of judgment that gets involved is
far better,
more complex.
Because I said, right, if you look at a trend of demat accounts or mutual fund folios, right from I think April 2022 till February 2023, you would be surprised that while markets was either falling or not going anywhere, the month-on-month new demat accounts, barring the IPO months, were actually falling. The mutual fund SIP book was not growing. People were actually redeeming more money than investing.
Sure.
Whereas Genius was actually advising people that this is a good time to increase allocations towards mid and small cap. Maybe this is a good time to really buy gold. And maybe on some month, just don't do anything. Whatever you are investing, continue to do that. You will do good. So we actually done analytics some time ago, and we made it public as well. So March 23, 2020 was the lowest that Nifty hit on that day in the COVID correction. And if we look at data on April 1, 2023, close to 2/3 of the investors actually underperformed Nifty despite being a rally.
Sure.
right? So what happens? Be it even the best of the investors, they tend to get biased,
Of course.
maybe because of they know more, they have
Hmm.
baggages or experience, or whatever you want to call it. We have friends and colleagues who may be talking negative, positively about the markets, and our mind gets influenced to act according to what we hear. It's tough to really ignore the
All
market
that noise.
movements and not make them a decision point in your actions. So when you have only a data-led approach, which is devoid of human emotions, one tends to start calling a market as undervalued. One
Okay.
tends to start calling a market as overvalued, irrational exuberance, or waiting for a correction.
Okay.
But when there is no data and market is rising, you would tend to say the rally will last. This time is different. Yeah. So
Sure.
there's a classic code in market.
Yeah.
This time is
Yeah.
different. Yeah.
True.
So I think to avoid this time is different kind of illusions, you need some kind of helping hand. And I personally believe that I know markets a lot more.
Sure.
I believe that I understand asset allocation, rebalancing a lot better than many people. But I still get biased by my baggages or experience, depending
And
on.
you still prefer to trust what
I
genius
prefer
tells
trust a
you.
system which can guide me how to invest than actually invest with biases.
This is very fascinating now because you're saying is if people followed genius advice, they'd be far better off than they wouldn't in some sense.
If they
Generally.
followed any advice which is data driven and not human emotion led, they would
Sure.
do better.
Yeah, so in some sense, when you talk about some of these outcomes, and when people are being given advice by genius, they would either follow it fully, partially, or not. Is there a data-led mechanism in which you're able to see that, okay, these are the people who followed advice, these are people who did not follow advice?
Of course, we track
And
it. Like, yeah.
I'm assuming that as part of your marketing play, then kind of how a mutual fund markets itself to say that we've delivered this kind of return, it would be a fair thing to say that genius has delivered this kind of an outcome for some people. Is that a
So
lens to
there are
apply?
regulatory bars or conditions
Sure.
on what we can do, what we cannot do. We would love to communicate success stories to end investors. There are complications about what we can do, what we
Sure.
cannot do, but we try to communicate to people that if they become a genius customer, if and when they become genius customer, they get access to all the advice that we are giving. So they have ready-made advice available on the app whenever they want to. We look at. We do communicate to them how we're looking at markets right now. Or rather, when we say we are looking at markets, how our model is looking at markets and making sense out
Sure.
of it. We do that a lot. And I think what happens, people try it with some amounts. And they've possibly have their own mind map in terms of comparing that my own DIY investments are actually not doing as much as good as the Genius portfolio is doing when I started investing. And people tend to buy that belief, become more reliant on what Genius is doing. And I think we have enough data where we know for sure that once an investor in Genius invests continuously for 3 months or more, the retention is 94%.
They'll remain on genius in that sense.
Yeah, it's 94%
So,
retention for us.
in simple terms, if I were to ask a very simple breakdown of people who are subscribers who've done something with you, vis-a-vis not subscribed to Genius versus subscribed to Genius, is that I'm assuming there's a specific percentage or ratio that
Of
you
course.
have.
So we are just
Yeah.
getting started on Genius. So
Yeah.
the number of people who would have bought Genius subscription today will not be even like about 18% of the entire app.
Sure. So, of all the subscribers or of all the people who are buying mutual funds through the platform, 18% of them are using Genius subscription.
Yeah.
And I would imagine this will consistently grow because people are experimenting. So, in terms of the GDM for Genius within the customer base, I would imagine that you will have, let's say, a trial period of some sort, and then people can convert to subscription, or how does that upsell work?
So
That's safe to call it an upsell, right?
Yes, safe to call it upsell, upgrade. Upgrade is maybe the right word. Upgrade to better way to invest,
Sure.
in my opinion. We do provide some kind of, I would not say discounted. Our pricing is basically, again, and under regulation you cannot do a lot of stuff.
Of course.
So the pricing of Genius is structured in a way that everybody gets a lower price for first 3 months,
Okay.
and the price automatically shifts to the real price or the higher price. So we start with like 49 rupees per month for first 3 months, and then from the fourth month onwards, it will be automatically upgraded to 49 rupees. So we provide you a way to try at a far lower cost barrier than taking a leap of faith to really give that much money and invest directly.
But the amount of money I'm investing, does that have any bearing on what kind of money am I paying for Genius?
No, so we are flat price service.
Which would, I mean, from a lens of somebody looking to put any decent size of money, this should not be like a bad.
Yeah, so because I think a lot of we all, maybe entire industry works hard towards telling people they need to invest right amounts. The average SIP in the country will be about 2,400 rupees. Many people may be having 3 or 4 SIPs, and Genius people have on ED Money as an app. Our average is about 3.8. So people tend to invest like 10,000 rupees per month on an average. They're ripe for Genius. But people who are yet to upgrade to a range, to stage where they've started committing some serious amount, they may not get attracted to a 250 rupees.
Sorry, just to click on this a little bit for a moment. When you said 10,000 rupees is the average, let's say SIP that people are making
per user.
She
may have multiple SIPs, but total will be about 10,000 rupees.
Yeah. So in that sense, the question I would have is this to do with the let's say percentage allocation of their overall investment coming in, or is this the kind of audience profile who has only this much to spare and that's why they're coming in?
I think
it talks a very different kind of persona.
No, I think it's a lopsided allocation that all of us end up doing. I think when it comes to investing, we are wired towards taking a large amount of risk on small amount of money, while keeping large amount of money safe.
All right.
Whereas the right way to approach investing should be take a reasonable amount of risk on large sum of money.
I mean, that's the only way to kind of deliver some sort of meaningful outcome, because otherwise,
so it's like,
the reward on a small ticket would only go so far.
No, so what happens is the reason that the average SIP is 2,200. Of course, India is not a very high income country, so that has a bearing on that as well. But if there is 180 lakh crore worth of money lying in fixed deposits and current accounts, savings accounts in the country today, and only about 22 lakh crore of retail money mutual funds. Total money mutual funds will be 48 lakh crore, but 22 lakh crore is retail. So if you see 180 lakh crore and 22 lakh crore, people are not allocating enough to the category.
Or is it also that a lot of people are still only on FDs and not on mutual funds? That would also be the category.
Again, it may be like they're putting FDs, they may have
gold, real estate
investments going on, multiple things people do. But the key part is they need to invest right amounts. So what we did in Genius, we removed the aspect of how much you're investing. We kept flat price. So whether you're investing 10 lakh rupees, 1 crore rupees or 10,000 rupees, we charge the same price. And it basically keeps us in check as well. Where, see, a lot of people in the market have not made money because there'll be hundreds and thousands of people to tell you what to buy. But nobody will tell you when to sell.
Okay.
The real wealth is created when you sell. Somehow, selling an asset or selling a stock is frowned upon. Till the time you don't really convert that paper profit into real profit in the bank account, it is not of any use to you. Yeah, you can't buy a home with your portfolio. You can buy a home with your bank account balance.
Somewhere we don't like to sell assets. It seems like giving up on something, maybe somewhere.
No, but I'm not sure about that aspect. When it comes to trading, people are selling
do this all
before
the time,
they're buying.
I'm curious.
So I
when
think
you say people are not selling and monetizing this, just help us understand this more.
So I think when people are investing for long term, it means they never sell. When people are doing short term, they mean that I need to really keep churning my portfolio. So I think when mindsets become like that, the right mindset should be I should be investing with a long term approach to investing.
Sure, but
when I have a long term
married to it.
Yeah, get married to an approach to investing, not a product.
Fair enough.
Or not an instrument. So I should not be married to a favorite stock of mine and keep holding forever. I should not be married to the only fund that I have in my portfolio and never sell. You will not create wealth. So what has happened in the past is because the trailing commissions that a lot of mutual fund agents earn or portfolio managers pricing is also based on AUM fee. Mutual funds themselves earn money on the AUM fee.
Right.
Nobody tells you when to sell.
Yeah.
Because nobody wants you to sell.
Yeah, I agree.
So in ED Money, what we did is we said it's flat pricing. So that we don't have anything to lose, our AUMs don't go down, our revenues don't go down if we ask you to sell. So we tell people to
You're a
book
lot more
profits
objective.
fearlessly.
You're a lot more objective about when to book profits, when to get out, and
Yeah, because
how
my
this is
revenue
to
doesn't
play.
depend on that. So if I tell you to sell a mutual fund, and suppose, for example, we were charging a 1% asset management fee every year as
You
a
don't want people to sell
advisor,
anymore.
I would never want to sell you, because if you sell 10 lakh rupees
Yeah.
from 1 crore portfolio, my income will go down by 10%.
Interesting. So you also mentioned something about the Genius portfolio versus the outside portfolio. Is that something which is a function of, if I'm following advice and putting some money basis that advice, it's tracked and maintained separately in a ledger so I can compare the performance on these two portfolios?
Yes, it is maintained differently. So Genius is a separate advisory section in the app.
So in some
And
sense,
yeah,
the
that's
advice
different.
that's coming to the consumer is also ready to act upon. So I can press a yes or a no or whatever, and that will translate into some sort of a transaction.
Something similar. So what happens when it comes to Genius? You invest. You first, of course, go through the investor personality,
Sure.
kind of get a recommendation based on your time horizon or the goal you're talking about. Once you make an investment in that, what happens? We keep giving you review alerts on a monthly basis. So if you're making any change, you'll get an alert. You will be able to see that review in the app and choose to act on it or deny it.
Fair enough.
If you choose to act on it, we will construct a action in a way that it just becomes a very seamless one tap execution
Understood.
for you. And if you don't want to act on it, it's your choice, of course. We can't force you.
Fair. So this is then would mean is my next question in terms of people's portfolios, which the 18% people who are on Genius, what percentage of their portfolio is on Genius?
So the people who are in Genius, over a period of time, people are moving more and more assets towards Genius because they're realizing that I've made money over last 3 years, of course, decent money being made, even if I underperform Nifty.
Sure.
Let me protect this capital because markets are not really going anywhere. They're too volatile or maybe too flat market for a long time. And the positive experience of Genius is motivating them to move money. But moving money is not that simple because there is always tax impact, right? I have to sell an asset, book profit. So unless there is dire need for me to really sell it, or asset allocation is such that I have excessive risk in my portfolio, I need to sell it, people will not sell it. So we don't really encourage that you should move all your money to Genius just because you have higher assets in Genius. It's users' call. But once people start in Genius, some people directly start in Genius because they find investing intimidating. They, of course, never go back or go out of Genius unless they want to invest for tax savings.
So in some sense, but you're also not incentivized separately because it's not like you're charging on the money invested in Genius. So you don't necessarily need to push people to put all of their money apart, more of their money.
Yeah, so whether of course, we would want, so ultimately, the long-term retention from a business standpoint will happen only on 2 things. We deliver great investing outcomes to the users, and if we deliver great investing outcomes and they put more money, their tendency to stick around for a decade or more becomes higher.
So the indirect advantage of people putting more money on Genius will end up being tangible because they will be likely more successful in all probability.
Likely more successful in the
financial outcomes.
Financial outcomes, yes. Yeah.
And that would be success for you as well because they'll stick around with the platform. They'll eventually bring maybe larger part of their portfolio into the platform from outside of wherever else they're investing.
Yeah, so actually that's an interesting point you brought in. We have a service on this. So because as I mentioned, close to 50 to 70% of the users who download the app are already KYC verified.
Correct. They're doing something
somewhere, right? And we have a service where they can upload their existing mutual fund portfolio. In fact, there's no need to upload. It's an integration we have with an industry body where the entire portfolio comes seamlessly to us, and we provide a kind of, I would not say free, but a complimentary portfolio health check. Okay. So where you can identify like a risk in the portfolio that you are overexposed to certain kind of asset classes. You possibly have overlap in the portfolio. Maybe you have multiple funds doing same job for you. You are maybe having extra commissions being paid to the agent for no reason. So we analyze the portfolio and provide you excellent recommendations on it. And that also tends to really drive a lot of people to Genius.
So in some sense, when you bring in all this information, my ability to hold/do whatever transactions in that portfolio is not coming in. It still remains in the original platform. You have the information, but not the actual.
So at no point of time the assets are with ET Money.
Sure, but you're the place where the assets are being managed from.
Tracked and managed, yes, yeah, you can see that.
So in some sense, if I were to sell or buy, I'm still doing it on the ET Money app. But for the portfolio that's elsewhere, which you've now been able to import just for the view part of things, in order to act upon your recommendation that you're overexposed to this or underexposed to this or should do this differently, I'll still have to go back to my
No, so
original
we can take a sell request or a further buy request or move from regular direct on the app.
So in some sense, once it's imported into your system, you have access to manage those assets as well.
No, we don't have access to manage. We have access to. We have basically a possibility we can take instructions from you and pass on to the mutual fund manager.
Directly or indirectly, you're managing.
But we can't do anything on our own.
Yeah, fair. I mean, you'll have to pass it to somebody, but for the user experience side of things, he can still pretty much use you to manage.
Yeah, so see, unlike a demat account where the assets are lying with the broker or a depository, the mutual fund assets are always lying with the RTAs and mutual funds. So nobody as an app is holding the assets.
Yeah, so from just a simple management lens, is like as a user experience level, I can tell you to do what I need you to do, and you'll have it done at the back end with whoever needs to act upon it.
Yeah, exactly. Yes.
Yeah, so indirectly, it's sort of, I'm able to manage from within this. So this would then mean that my entire portfolio from wherever else it is now is getting managed by ET Money because I've imported it. As a user, I might not have to go to 5 places to buy or sell. I'm able to do it right here.
Yes.
And this would automatically give a jump start in terms of the kind of asset under management. While that's not a KPI that you chase, but it's a number that will add up, right?
Yeah, it's so in fact, the assets under tracking, as we call it, is actually 3x of what we manage on our own ET Money app. So it's a very large number.
So from a behavior drive that, in terms of the user journey that we had started off in the conversation, so people come in, buy their first mutual fund, some of them buy Genius, subscribe to Genius, so to speak. And at some stage, they also start bringing in the other part of their portfolio from wherever else they're invested to ET Money now to just understand the risk exposure and all of this. So from a user journey lens, and you had those 8 different personas, I'm trying to understand now in terms of how you orchestrate some of these goals. That each of these people will have a different path to the end outcome. They might have different end outcomes as well, basis their risk appetite and the financial personality. Is there a nerve? You mentioned a term for this, right? What
Investor
do you call
personality.
This? Investor personality. So the investor personality being what it is, it'll have different kind of end outcomes and aspirations as well in some sense. So from a user journey lens and the orchestration of these distinct user journeys would mean a lot of content personalization as well to a certain lens, at least at the segment level.
How we manage the kind of assets or investments of yours in stocks and mutual funds under Genius is governed by the investor personality.
Sure.
A lot of communication that may come to you is managed via the outcome of investor personality, but we are yet to reach a stage where the content is getting personalized to that.
Okay.
I would love to reach that stage. I don't think we are anywhere closer to it.
And
it's far more complex to talk about markets as a review or a view, keeping in mind how to strategize things. I think we require a different version of ChatGPT which is not live yet.
Very interesting. So Santosh, a fairly interesting and comprehensive play on data, and I would imagine that this automatically translates into a lot of everyday insights and everyday experiments and outcomes as well. Help us understand a bit on your experimental framework. What frequency, what scale, what nature, what teams, how do they drive it? How do you remain objective through the kind of chaos that it is?
So I think the testing of multiple approaches on product design or marketing communication, there is some kind of team available for it inside ET Money, which is part of growth team. It works with product, it works with analytics, it works with marketing continuously all the time. The way we go about it is basically identify problems we want to solve. So sometimes we want to solve the problem of kind of communication, that are we communicating right thing to the customer. Sometimes it can be right at the app onboarding level, like when somebody installs the app for the first time, what do we do? And there are aspects about how do we drive more adoption of different products inside ET Money app. And some things surprised us, like one of the biggest experiment that we did, which had about 30% uplift in our conversion rates, was actually an experiment which nobody wanted to do.
Okay.
Right? So typically, from a UX principle, if a user is in a journey already, you would not really want to distract the user at all.
Normally,
yeah, you would normally would not do it. Like typically on a e-commerce checkout page, you would not really have another banner, right? Easily.
You wouldn't want to ask a survey question on a checkout page.
Exactly.
By all
You would
means.
not. You maybe people actually disable back buttons or other link outs on that page as well. People go to that length. So we basically had this idea about uh, we have an insight that more people who are existing investors in ready money, if they also bringing their past portfolio in ready money, they tend to become better investors on ready money. When being better investors, they basically manage portfolio better. They also tend to get retained better on ready money.
Okay.
But what happens is once you start investing, it is a very secondary, tertiary thought in your head to really bring in your past portfolio.
Okay.
So we wanted to see that can we really, if we know that once
Speed that
people
up.
start investing, the likelihood of their importing past portfolio becomes lesser. The likelihood of basically somebody converting better and retaining better is far higher if they start their journey with portfolio upload on the app. And it was tough one to task solve for, because the problem is at no point of time I know that whether you have an existing investments or not.
Sure.
And somehow as a money we never believed in asking, are you an existing investor? So we answer this question. We've not done that. So interestingly, we did an experiment about 4 months ago where after you enter your PAN, because of whatever industry integrations that we are supposed to do as an app, we detect that you're already KYC verified, so we can skip the KYC journey for you.
Sure.
But because you're KYC verified, there is a higher likelihood that you may be an existing investor in mutual funds.
Sure.
We never ask question that would you like to track it right now. So the moment we discovered that somebody is investor in capital markets and has a KYC verified done, let's ask the person, would you like to bring in the past portfolio?
Okay.
Typically would believe that let's not disturb the person, let him continue the journey. But we disturbed that user and started asking this question. Most people end up saying yes. Almost 80% people end up saying yes, I want to track. And we believe that once they bring in the portfolio, they would like to see what the portfolio should be straight away, rather than actually continuing the journey, because I've disturbed the user and then I'm supposed to really deliver what I've disturbed.
So you're on a different journey, but that different journey has a different outcome.
So we tested an approach where for some users, we continued the journey which the user was on, which was a not good UX. And for some users, we showed the portfolio that we imported immediately.
Okay.
Surprisingly, the journey where we continued on the past task, where he was wanting to open an account, we did that, worked better than basically moment of truth or the wow moment that the user will have by seeing his past portfolio immediately on the app. So my past baggage, as I call it all the time, is would have made me take a decision that we should not disturb the user. We disturbed. We should basically show the portfolio right now because we've disturbed the user. We chose not to do that. Of course, we experimented both the versions and learned that what the baggage told actually was wrong.
So very fascinating. So Innovators, what you're saying is I import, but I will actually view it later. I'll continue with my account creation process, buy my mutual fund. But then also, I mean, on the side, I have something which is now ready for review.
Yeah, because it takes time, right? So you are entering an OTP may fail, the mobile number will be different. So your OTP goes on email ID, you enter that as well.
More friction.
It's a friction. It's too much friction there. And
but in some sense, what I'm understanding about your user persona is a bit of high commitment, which means is
maybe. Yeah. So we justify to ourselves that we are attracting high intent users. Maybe they actually are very excited about forget about new investments. Let me first get hold of my existing investments. We rationalize all these things, but I wish we had rationalized this far earlier.
Yeah, well, I mean, the best wisdom always comes in the hindsight, right? Yeah. That's what I learned about the whole complex nature of your business. It would be, let's say, a little ambitious to be able to dumb it down to a very top of the funnel advertising kind of play where you're able to get people to appreciate the nuance of this. Right. So in terms of your user acquisition growth strategy in the kind of competitive space you're in, anything that kind of is a winning formula for you by now? Or you kind of more comfortable than, controlled, but let's make sure this is working out?
No, so I think we've played all sort of roles. We've been aggressive advertiser on display, on traditional media. We've also experimented purely digital acquisition through performance advertising. We've run both of them together, but eventually I've learned that education works the best.
Sure.
So I think our 80% focus on a daily basis is how do we really educate the investors or prospective investors with the current market context for information which will be relevant to him or her to build a better financial future. So we keep hunting for ideas, we keep hunting for opportunities, and good part is the digital media is so fragmented that some people's first port of call is YouTube video, watching YouTube video. Some people's port of call is actually Google search, and some people surprisingly go to Quora as well, right? So, and some people just discover content on Instagram Reel or going to Twitter threads. So I think the job of a marketer today becomes, or content marketer in that sense, becomes that how do you really, first of all, develop content at scale and at a frequency which is possibly equivalent to building a media company. And second, how do you really drive reach of the content you're building? Because the content today is so transient, right? Like the user attention spans are like so small. Getting a 50,000 views on a YouTube video you produce after working hard for a few days, maybe sometimes weeks, becomes too tall an ask today, right? So because most videos will possibly die at death after
they don't have that
15,000
shelf life.
Yeah. So we learned again on that aspect that we will never be able to drive a lot of video views.
You can't be a spike. You might have some long shelf life content, but a whole bunch of short shelf life
So
content.
typically what happens if you have a 500,000 YouTube subscriber base across a few channels that we have, you would tend to expect that if you release a video, at least a large portion should watch it because they follow you. But that doesn't happen.
But that's algorithm that play as well.
Yeah, exactly. Of course. So what we realize is that focusing on evergreen content is a far better strategy.
Sure.
So content which is relevant today, relevant tomorrow, maybe relevant 1 year from now. So a lot of our videos today actually have broken a few lakh views, despite being a brand who's building.
Because it's also vintage and kind of compounds over time.
Yes, compounds over time. So I think focusing hard and ruthlessly on evergreen content or giving a shape or narrative of evergreenness to a content which may be a fad right now is the hard work that you do. And we keep running this. In fact, we get surprised that month on month, the number of people who say that they encountered ready money either via word of mouth or via a content item on any of the social media channels just becomes the largest source of acquisition for us.
The last lenses I'd love to apply to this whole acquisition versus retention piece. A lot of companies still, and I wouldn't necessarily judge them for this because it's a function of a lot of choices that they make, tend to optimize for a key metric, let's say the app installation or the first activation or one of those things. Have you been able to, in your data system, stitch together the fact that, okay, people coming from this kind of sources, maybe even at a campaign granularity level, tend to become better investors in, let's say, the 6 months from now, and not necessarily disconnecting these two systems at the point of, let's say, the app install?
So I think people who come via referral channels, of course, are the best. We have a referral program on the app, which contributes probably highest conversion rating or highest converting cohorts in that sense. But because we spend on education a lot more, the byproduct of that is a lot of organic installs and organic signups happen. So I think we are biased to say that organic is the best route to convert. But I think we have possibly fallen on organic as a way that because we learned the hard way that the investments as a category is such that a lot of things have to come together. Markets, need, timing, to be able to drive better conversion from paid campaigns.
The reason I'm smiling is because a while ago you had said that this is not quick commerce and this is not food delivery. You can't scale it just like that. There's a lot of factors need to come together to make it work.
Yeah, if you scale it, then you'll scale it for 100 rupee SIP transactions, which neither helps the customer nor helps us. And somewhere, because you're focused on really making people take right investing decisions, you really just can't go and advertise the top performing fund, whose best time may be in the past.
Great. Yeah. Awesome. So it's extremely insightful. Thank you so much for doing this, Santosh. I'm sure there'll be more room for more conversations, more in-depth pieces. We'll try and spend more time with your team.
Sure.
Lovely having you on the show.
Thanks for having me.
Thank you so much.